Good morning, everybody. It's Tuesday, January 9th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments or want to chime in on anything we're discussing, feel free to drop us a note in the chat area, and we'll be sure to get to that during the show. Real quickly here, overnight markets had March corn down a penny at 4.54. March soybeans up a penny and a quarter, 12.46 3/4. And March Chicago wheat was down a half at 5.95 3/4. Welcome back to the War Room here, Justin. Just wanted to get some, I guess, overall thoughts. I mean, you know, we've seen a lot shake out here in the last couple weeks. A couple of big reports coming up here this week. We got CONAB coming out tomorrow, followed by, you know, the much anticipated USDA report on Friday. So I guess just a couple overall thoughts, and we can build on from there.
Yeah, thanks, Dan. A little disappointed that you guys let these markets go to hell.
We tried our best.
Disaster. So hopefully I'm coming back. I brought a blizzard with me, but hopefully markets can find some stability here. We've talked about this for a while. It's a little worse than, I think we even anticipated the, amount of unsold bushels out there. And, you turn the calendar over to 2024 and, all of a sudden all these things that we've talked about, that we had a little first notice day rally that didn't last. And we never really got to the price levels that people wanted to sell. And now I think we're in a situation where there's cash needs, there's interest, they're starting to eat away at people. The optimism, South America is getting rain, so there's just really not a lot to get people excited. And I think time's just the enemy here. So I think we're seeing a lot more farmer, moving cash, trying to pay off some bills, those kinds of things. Demand has been okay, but not great. And then technically, funds keep piling in because they're earning they have a good carry market. They're short, it's working, it's making multi-year lows. So typically, until that trend breaks, they don't mind to continue to pile in. And at the same time, you got the farmer selling, right? So it's been a tough mix of things happening all at the same time, in my opinion. I do think we're, kind of looking at new crop prices. I do think, D's 24 corn under 490. I think we're getting in pretty value area here, especially for the time of year. This would be the lowest crop insurance price if we were to be here in several years. So I think you're under cost of production for a lot of growers, certainly anyone that borrows or that rents ground. So I just don't see a huge incentive there for a lot of selling. We talked about this yesterday. There's a huge amount of corn acres that were planted, so I think a natural rotation makes sense in combination with this low flat price. I think the corn market may be getting a little overdone here on the downside. I would think we'd want to find support in that market between now going into certainly crop insurance or plantings. One of the things that we always talk about is the soybean to corn ratio, and I think that's important, but also the combination of flat price. In my experience, when you have high flat price, the ratio has to go higher, meaning that beans have to carry more of a premium over corn to get bean acres, and the opposite in low flat price, right? Because the cost of production is so high relative to beans, it makes it tougher quicker when prices are lower. We've seen producers tend to go to the cheaper crop to plant. When the ratios are, right now we're kind of at an average type ratio, 2.4, I think, somewhere in that camp. So I just think we're getting a little ahead of it. It makes sense why we broke, but I think the weakness, and you guys can jump in, I think the weakness going forward from here, if there is going to be old crop, just too much supply, not enough demand kind of thing. I think, looking forward out into the, deferred crop months, especially new crop and forward, I think kind of find some levels here that they won't want to get too much cheaper than.
Yeah, I'd add to that. Just, if you're talking about, why are we lower right now? It's because we have, excessive corn acres in 23. The perception that yield was not as bad as expected, and we heard that a lot anecdotally. We're going to find out on Friday what that stocks count was from December 1st. So that's the first actual count of supply where they reconcile the yield on. This is a very big report coming out on Friday. We've talked about this quite a bit on the show, but when it comes to flat price and spreads, spreads are still not as wide as they could be, and we're coming out of a high corn acreage year. So you're looking at like a July D's corn spread, for example, at only 11 cents carry. It doesn't need to go that wide until people are basically forced to sell, because they're running out of time on the calendar. And we saw that with the September contract. We saw that with the December contract. As we got into those respective first notice days, we saw extreme spread widening going into those first notice days, which to us shows there's a bit of a position problem. There was corn being held on paper, whether it's delivered on basis only or it was long only on the board. Who knows exactly, but there was a long that needed to roll that wasn't actually taking delivery. And I still think that's a risk going into these major first notice days, is that we continue to see loss of carry. And there'll be times, right, where we'll see 20, 30 cent pops to sell. That often happens, at least. So it's never a pre-gone conclusion, but you see that again. Those are opportunities, I think, for us to continue to move out of the rest of our grain that the average grower in this country has to sell. But I'm just thinking, just the how tough things are going to be for U.S. growers coming into loan renewal season. We had 2023 fall crop insurance off the December price that was established at $4.88. That's quite a substantial drop from the $5.91 spring price. That really is the reason why we got so much corn acres, 94, 95 million corn acres in this country. So we had a huge price guarantee going into the 23 March 1st timeframe, $5.91. And then you have a break all the way down to $4.88. That's a massive drop on revenue just from price alone. So a lot of 85% policies paid out this year just because of their loss of revenue from price. But subsequently, though, let's say that corn didn't get sold to the degree it wanted to be sold. If someone went in and sold just what they needed for harvest and stored all the rest in their bins, completely unsold, we've dropped again another equivalent to about 62 cents to yesterday's lows on that post that $4.88 price after the roll on first notice day. So I think that you still have a lot of people that if you haven't sold corn, there's a huge desire not to sell, obviously, still, and that's just kicking the can down the road a little bit more, which might be why the spreads haven't widened as far as they need to, and it could be what's weighing on that December 24 contract as well. So two things to watch is, how does Dec 24 stack up to July 24 as we go through the next 5 months, right? Is Dec 24, which by a lot of university data, below cost production from our estimates for the majority of growers right now?
Pretty significantly too, if you look at the number. I mean, it's
it is. Whether you look at Purdue data or Farm Doc data, you back into what that break-even price is at APH. We're below cost production by 20, 30 cents.
Excuse me.
That's futures, not even discounting basis as well.
Right.
So if we start to see, that, hey, we had too many corn acres last year, perhaps, the balance sheet's going to be a little bit cleaner on its own for not building a surplus. A Dec 24 is actually going to, like Justin said on the ratio, maybe that holds a little bit of value to beans just because we're in a low cash price environment. It might not need to rally substantially, but just holds a little bit better value than beans or a little bit better value than old crop corn, which is expected to be in excess.
Yeah. And, the market doesn't have to make the farmer money. Right. So, make that clear. Like it doesn't, we've always said that like the market doesn't care if you paid $600 for rent. Its job's not to make you money for any decision you make. But when you have the majority of acres and you have it underwater by a good amount, we tend to see the market, at least try to make sure that we get the acres planted. Right. So I think that's why it's such a strong seasonal. I think this is taking people off guard because usually a lot of times you've bottomed before, between September, October, kind of going in the end of the year. So I think this counter season will move down. I think before I left, we talked about, where the December was trading on first notice day, and then we had a rally, and I think March corn got up to 493, 494. Well, that was, if you look at the combination of the spreads and the rally, you were 40 cents off the recent lows of the nearby contract. To your point about that 62-cent drop, it's like looking out forward, using those carries. So when you get that rally, looking at that flat price that you want, quickly we're 50 cents away from that. So been a pretty devastating break, I'd say, for sure. And it's at a time when I think people need the money. But that's why we're here, right? So I think that's why we've had this move. To your point, we have a big report on Friday. Is it a, buy the rumor, sell the fact type thing? I think it probably a good chance that we see yields come up, and the market seems to be onto that. So maybe we're kind of factoring in a decent amount of bearish news. It's been raining in South America. I think you ran in a lot of the people that tried to buy it because of a South American drought. I think you kind of put those people underwater and forced a lot of liquidation. But the majority of the corn crop is a safrinha crop, right? So I think it also makes sense that beans are the biggest seller here because most of the beans all the beans are first season crop. So getting rains there, so that bean size in South America is stabilized. From what level you can argue that, but
yeah, that's what I was never going to ask you. Yeah,
I was never a big believer in, we try to kill the bean crop, like it didn't rain, so beans are dead. And I think we've proven here that you get those late rains, or even these are even actually just timely rains. That crop can recover quite nicely. So now I think it's a bigger question of, the safrinha crop, the acres that get planted. And maybe that's also why July corn's holding in there a little bit right now, Dustin. I think if we can look forward and the crop looks good, it gets planted. Like I said, it's such a bigger crop than the first season corn crop down there. So I do think if you see that window and it looks like it's good, that's where you could see old crop corn really struggle here, because that'll be competing against our exports even to a larger degree.
That's very good. Coming into a couple minutes here before the open here, Rylan, what do you got for me on livestock?
Well, kind of interesting action yesterday in the live side of things. Fed cattle traded at the highest level we've seen since just after Thanksgiving, and right up to the 50-day moving average. So we got this nice little premium in cash. So far, we haven't really seen any trade this week so far, but it is the roll week. There is the rebalance happening, so you can see that Feb is really gained on April, like right out of the gate yesterday, new high for the move, and then just completely collapsed, which is exactly what happened in just pretty much every contract across the board yesterday. So, it's definitely kind of a front month trade right now. All eyes are on cash. It just seems like the market's really cautious here before the report. It seems like we make the big Monday move, and then we just kind of chop sideways. We've already quantified a nice move in cash for the most part, and I think the focus is going to be on the weather for the most part, and the impacts of the storm that's hit areas in Kansas, Nebraska, even some areas in Colorado. So I think we've got a little bit of a weather premium kind of baked into the cash market, but it just seems like the futures are really lagging that right now. So I think the board has a little bit of catch up to play, but at least from what we've seen when we make these big moves on Mondays, typically we just kind of hug in the range. So just kind of waiting to see what happens there. I don't think anybody, especially the managed money or the specs, really want to take too big of a stand before the 31st. So that's still just kind of looming right now. But there's definitely, I mean, it's been a pretty good market. It's been a good bounce so far. I think there was a lot of doom and gloom about a month ago, and we've kind of shown the resilience here. So things are still kind of looking up. I think we're more just kind of sideways for right now, just because it feels like all eyes are on the 31st report, and the only people that are willing to push this thing higher is probably the packer.
Very good. Appreciate that, Rylan. Just came into the open here, guys. March corn down $0.015 at 453 3/4. You got March soybeans down $0.01 3/4. 1243.5 is the last, and March Chicago wheat's up 4 at $6 even. every day, streaming live on X, Facebook Live, and YouTube Live. We start at 8:15 Central Standard Time when the markets are open. Appreciate everybody tuning in this morning. We'll be back with you there tomorrow morning. Like I said, 8:15 Central Time. And hope you have a great day. Thanks.
Thanks, Dan.